Welcome to Kings and Queens accounting class. Today we are going to be looking at interpreting transactions using double entry concepts. Earlier we have showed you that understanding the basic concepts in accounting is critical to understand the details in managing an organization's financial records. And so we're now going to be looking at how do we interpret transactions. And what do I mean by transaction? Let's establish. Matter of fact, before we go further, this lesson is going to be seeking to answer the following objectives. What is a transaction? What is double entry? And how to interpret transactions. So let's go on. Let's get it on. What is a transaction? First of all, a transaction is a business activity. It's a business activity. All right, a transaction is a business activity, or we may say, or relationship. It's a business activity or relationship between two or more parties. So every day we pursue or we encounter transaction. So when you leave your home, take a taxi to the mall, you are participating in a transaction. When you go to the restaurant and you purchase a meal, you are carrying on a transaction. When you go to the store to buy a pants or a shirt, dress, a bag, a shoe, you are conducting a transaction. A transaction then is a relationship, a business relationship between two or more persons, and they are exchanging some form of exchanging goods and services for money. Right? That's what a transaction is. So now we have accomplished objective 1, indicating what is a transaction. Secondly, the next question we must seek to answer is, what is double entry? What is this thing called double entry system, and what is it? A double entry system, yes, it is where you record the transaction in two accounts. It's where you record the transaction in two accounts. And that is what is referred to as double entry. Now, let's move on. So, let me use an example. This is a transaction. Bought a bag from Walmart for $400 cash. At this time, so we're saying you've gone to Walmart and you purchase a bag. That's a transaction. And therefore, two parties always comes into question in a transaction. Businesses in recording transactions look at it in two ways. One, from this customer's standpoint, and also from a supplier's standpoint. So in this case, I am buying the bag from Walmart. Walmart will see me as a customer, and I will be seeing Walmart as a supplier. So, bought a bag from Walmart for $400 cash would be an example of a transaction. Now let's go to objective 3. How do we interpret the transactions? First of all, before we get there, we have to understand that in the double entry system, in every transaction, there is always two accounts affected. Now, you note the definition I gave for double entry is that it is where you record the transaction in two accounts, right? Now, the question then you would ask me is, what is an account? Now, an account is where we keep track. Where we keep track of the activities taking place with that item. Okay, so when we refer to an account, you're going to open an account. What we're really saying is that we're going to record information relating to a particular item and keep track of the item to see how things are with it. That's where we come in terms of an account. Now, the double entry system requires you to open two accounts, because in every transaction we say there are at least two or more parties exchanging goods and service for money. So let's go on. So now that we know what we mean when we say you're going to open accounts, you're really keeping record of a particular item and track its activities. Let's go on. Let me take this side. So, in the double entry system then, you're required to open, what did we say earlier? Two accounts. You're required to open two accounts. So the idea of two accounts is simply a T, and this is referred to as what is called an informal ledger. The T is referred to as informal ledger. So you open two accounts, right? And the name of the account is written in the center. And this side is referred to as the debit side. We use DR. And this side is referred to as the credit side. We do the same thing. So the name of the account is written in the center. Debit side, credit side. Okay? So when we say that, let us say that we call this account bag. Right? If we call this account, and the account symbol is A/C, so if we call this account bag, we're going to enter information in relation to bag account. And we say we are going to debit the bag account. We record the information on this side, right? Which is the left side, referred to as the debit side. If we say we're going to credit bag account, we record the information on this side, which is the right side, yes? And the same thing applies. Now, in double entry, you record opposite. So if you're recording a transaction in one account on the debit side, the next one will be on the credit side, so it's opposite. So if I debit in this account, I'm going to credit in this account. If I credit in this account, I'm going to debit. So it's always an opposite relationship in the double entry system, an opposite relationship. So debit, then credit, or credit, then debit. Opposite relationship. All right. So now that we have understood the whole matter of double entry and what is an account, we're now going to move to look at interpreting the transactions. So let's do that. Now let's use a few transactions then. One, let's say we bought a car on credit from Joe Limited. $20,000. There, $20,000. There's the rule in interpreting accounts, the transaction rather, that you would ask yourself a few questions. So the transaction says bought a motor car on credit from Joe Limited, $20,000. Question is, what are we buying? The answer is a car. So we know that is an account. The next question that you would ask is, from whom are we buying the car? And the answer is Joe Limited. So right away, we have identified the two accounts affected in the transaction. Let's go to another one. Sold machine for cash. Let's say it is $25,000. We sold machine for cash. Again, we're going to ask ourselves the question to determine the two accounts affected in the transaction. We always try to do that, to find out the two accounts affected in the transaction. Ask ourselves at least two questions. Let's go. This transaction said we sold machine for cash for $25,000. The question that you'll ask now is, what are we selling? What are we selling? We're selling machine. And what are we receiving? We're receiving cash. So the two accounts will be machine and cash. It will be machine and cash. Number 3, let's look at a third example. Let's say that Susan started a fashion store. A fashion store put in $10,000 in the bank. So the question is, what? So Susan started a fashion store, putting $10,000 in the bank. Now, Susan is putting money into the bank. For what reason? To start a store. When Susan whatever Susan is putting in the business to start the business is referred to what now? Her what? Her capital. Whatever she's putting in the business to start it is referred to as her capital. Another word for capital, what did we say again? It is equity or net worth. So if Susan is starting a business and she's putting money into the business, then whatever she's putting in is referred to as her capital, or we also call it what? Equity or net worth. So first of all, so once she's starting this business, yes, this means that it is going to be, the account affected would be capital. Now, where is she putting the money? She's putting the money in the bank. So the bank is the next account affected. All right, let's go to another exercise. 4. Let us say we have bought a table paying by check. Bought a table paying by check. And let's say the amount is, right on the check is $7,000. Now, this transaction is saying we're buying a table paying by check. What are the two accounts affected in this transaction? Again, we said we're always going to be doing what? Asking ourselves at least 2 questions. Since it says we're buying, so we ask, what are we buying? We're buying what? A table. So that's the first account affected. And what are we using to buy the table? We're using our check. Now, we do not open an account and call it the name check. But once the word check is used here, it is represented for the bank. Because a check is really drawn from a bank account. Therefore, once a transaction carries this word check, yes, it must be the bank account. Once it is carrying the information check, it is the bank account. And we go back to number 3. Once we are talking about starting a business or putting something into a business to start a business, it is going to be capital. All right, so we would have then shown you how to interpret the transactions. And I want to do that. I want to recap before we close. Yes, a transaction is an activity or a business relationship between 2 or more parties exchanging goods and services for money. Right? And we said that double entry is about recording the transaction, the information from the transaction in 2 accounts. We indicated as well earlier that an account is really a record we're keeping to keep track of any item or activity within a particular item. All right, and then we say now to interpret the transaction. To interpret the transaction, we are going to ask ourselves at least 2 questions. 2 questions. For example, go back to that bought a car on credit from Joe Limited. All right. The question that we ask is, what are we buying? So you ask yourself 2 questions, and that will help you to kind of determine what this transaction is saying. So if we're buying a car, then if we're what we're buying, a car, so it becomes an account. Who are we buying it from? We're buying from Joe Limited, so it is Joe Limited the next account. Sold machine for cash. What are we selling? We're selling machine. What are we receiving as a result? Cash. Next transaction, Susan starts a fashion store putting $10,000 into the bank. Once Susan is starting a business, whatever Susan puts in the business becomes her capital. Therefore, it's going to be the capital account. Where is she putting the money? She's putting it where? In the bank. So the second account is bank. Let's go to the next one we showed you. Bought a table paying by check. Yes, we're buying a table paying by check. So, what are the question we're going to ask ourselves? What are we buying? And the answer is a table. What are we using to buy the table? The check. And we said earlier that once the check comes in the transaction, it is the bank account that is affected, because a check is really drawn on a bank account. Ladies and gentlemen, it was wonderful to share with you, and I hope you have understood the concepts that we have shared today. If you have any challenge, please let us know by communicating with us, sharing your concerns, and we'll be ever so willing to satisfy your understanding. We are Kings and Queen Accounting Class. Thank you very much. If you like this video, please click below and subscribe. Thank you very much.